All right, ladies and gentlemen, I hope you're having a wonderful evening. It was one of the craziest days in history today, both in the United States and all across the world, and I thought we would do a live watch list. This was actually Chad's idea, and I thought that was actually Chad's idea. While we were live, we were here, we were figuring, hey, since tonight there's going to be a lot to cover, we will be getting Japan opening, because literally after I made you guys the watch list yesterday, the market started going crazy after hours. It started with Japan, and before you knew it, by the time we were opening up this morning, the NASDAQ was down about 6%. So it was absolutely wild. There was a lot of crazy things, so I figured we would have a very special live watch list. We have been doing these on Thursday, but hey, the Chad said they were down for it tonight, and here's the good news. So it's going to be a normal watch list. We're going to cover all of that, so I hope you're familiar with that. If you don't know, we are live Monday through Friday, 30 minutes before open. Where is it? Hold on, I'm trying to get it for you. Here it is. Yeah. Oh, wait, no. This is the recap. But yeah, here it is, youtube.com/thestockmarket. Again, now, there's a lot of people today. A lot of people were freaking out about this, but we are live every single day. I'm trying to go. You got to go in the live videos. And tomorrow, this whole week, I think it's going to be very important because I don't think this move is over. We're going to talk about that all, but long story short, why we're here right now for the live watch list to cover what happened today, but to also talk about this, the futures. So right now, Japanese futures, they are up by 4.6%. That is huge. So I believe the NASDAQ is up around almost 2%, I want to say, 1.8%. And then ES, the SPY, is up by 1.3%. So for now, this is looking good. So it's been about 1 hour since these futures have been open here in Japan, and things are so far so good. So we'll see where that ends up by the time we're done with the watch list. For now, it's looking like you're going to get a little bit of relief. Other than that, if that flips by the time we're done or by the time we go to bed and then wake up, yeah, it's going to be awful. And then, yeah, the brokers were not good today. We could talk about that here, but Chatadonia, there's a lot we're going to go over. Literally, we woke up, the VIX was at 70 in the morning, the yield curve uninverting, Bitcoin and crypto dropping almost 20% in a day. It was absolutely wild. So listen, I know some of you might have to bear with me if you're on the recap, but let's say hello. Good evening, baby. What's going on? Are you guys ready for a live watch list? Checking in with the Chad, baby. So, again, this has been borderline. It was Japan's Black Monday. It was the worst for them. Oh, yeah. What up, baby? What up, Dennis? What up, Colin? Mr. Malone. Radical. Dakota. Hunter. Fall Paper. Brian Fierros, baby. Good evening. What's going on? What's going on, Shizu? What's going on, Gus Gonzalez? Good evening, Tyrene. Let's go, El Trapato. Oh, Eli. I know Eli have the long-term, baby. Hey, man. What up, Ansel? How you living, Robert? What's going on, Stella, Luigi, Elias, Boney, Johnny, me, Nacho, Donald Yates, baby, Alice, Alexander, Andrea, me, Nacho, Panda, Jay, Cotton, baby. What's going on? What up, Jericho? What up, The Real Infinite? Laurie, good evening, baby. Good evening, Chatadonia. I hope you guys are ready. I'm telling you, I love the real volatility. It's good to be home. We're actually getting things moving. So and then again, you're already up right now in the pre-market. Everything all around the world is looking good. So are you guys ready? If you have any questions, feel free. We are live, and again, if you are watching the recap, you're just gonna have to bear with us as we go here with our live format. But let's start with it. So, again, if you didn't see how today opened, this little move on the futures, the crazy part is we closed right here at 519. You're up like 3-4 points after hours. This was something all day today. If you don't realize how much we moved, it was like even a 2% or a 1% move, you would barely notice it. This gap down was absolutely huge. Remember the last couple of days, we were talking about that 72 hours that got us here. You gapped down about 5-6%. You were about 0.5% from limit down in the morning. The VIX, no exaggeration, we were talking about the VIX being above 40 for you to get a surprise rate cut, for you to get an unannounced, unscheduled meeting where they cut rates. By this morning, I swear this thing was trading at $69. I'm telling you, it was absolutely abysmal this morning, and there was a lot of fear. And the crazy part, when I made the watch list, I was telling you guys, nothing really happened over the weekend. By the time the watch list came out, Japan was closed for about 2 hours. So the watch list came out yesterday at around 3 p.m. Japan opened around 5 p.m. And then it was just literally from the get-go, Japan opened up, we gapped down, and then that's it. The rest was history, and we were really down. Europe opened. People thought it would chill out, and nothing was there. And then again, it ended up being one of your worst openings. I think even the NASDAQ, I don't think there's ever been a time in history the NASDAQ was down like 1,000 points or something on the futures pre-market. So it was absolutely nuts. That was part of the morning, but to very much simplify what we had to deal with, there was 2 things at play once again. Number one, it was a growth slowdown / data drop-off. That's what everybody was worried about, simply because that would mean that Powell and the Fed are behind the curve. So that's why everybody was freaking out on one element of it. The other part, and this is what I really believe was wrong with everything today, it was the Japanese yen. And now a lot of people, I've made videos on this channel for years on this topic, and that's why a lot of people have asked me, certain things related to the yen and the carry trade and what's this and what's that. And I'm like, we have a lot of videos on it, and we've talked about it for a very, very long time, but I'll make it very simple for you right now. The Japanese yen, when that thing strengthens, the Japanese stock market is going to tank. So without getting too intense about what's going on with the carry trade and the unwind, what you got to kind of realize is that the Japanese yen and that weakening has led to a huge advance of the Japanese stock market. So now that it's strengthening, that could bring back all of those gains and bring their markets down. And why that's important, just from a sense of global liquidity and selling things off literally in 3 days after today. Japan, they're up right now, but they pretty much at one point gave up all of their gains on the year. So it was very, very wild there, but this is the simple way I would identify today. It was a mix of being worried about the data slowing down faster and then growth slowing down. You did have Mary Daly. She spoke after hours, and she kind of said they're worried, not worried, but this is still going to be the narrative moving forward. We'll talk about what to watch for this week, but what's going on with Japan, I said it for pretty much, this is why I'm live right now. We're literally live right now just to watch the Japanese stock market. So again, the Japanese yen and everything there, but go look at the Japanese market if we wanted to know how today was going to end up. Yesterday was just Russian roulette with the Japanese markets. They opened up down, they tanked. We're going to have a little bit of an effect. If these guys go up, then we're going to get a little bit of relief, especially with there not being that much data this week. So I think that's very important. We'll see how the next couple of days play out. We'll talk about what I expect moving forward, but getting into the second key, I will tell you the rest of the week is pretty dry, my friend. So we don't really have too much data. We had data today with the ISM services, the ISM, and that didn't do anything. If anything, that kind of helped us out. If you notice, the market did move around from when the data came out, but the ISM services, remember, it was ISM manufacturing last week. That's what started everything before Powell. So ISM services, the employment actually went up, and that was kind of like a collective sigh of relief, and then everybody went, whew, and then we're able to brush it off. And then besides that, since that was the big set of data, you're going to get jobless claims this week, and then there's a bunch of bond auctions, and then the Fed shares are all going to come in, like I said, and try to talk you back from the edge or explain how this one data set means this or not. Surprisingly, though, some of them are kind of talking, if you notice, this is something I already noticed from Dolly and from Goolsbee, even from Powell. I promise you right now, the Fed speak is starting to change. I don't know if you guys have noticed yet, but go look so far. Dolly, Goolsbee, Powell, and then we're going to get a couple more this week. They're all starting to slightly adjust what they are saying. Okay, so you got to keep watching out for that. That I think is going to be very, very important, and that will say a lot. But like I'm saying, besides that, the bond auctions might be the only thing that'll move you. But I don't even think anymore it's really about earnings and the bond auctions. Can those affect the bond rates and move some of the yields and rate cut odds? Sure, but I don't think that's, really what's going to drive us here. So the way I'm looking at it moving forward, and I really hope you guys get this, man. Today was absolutely massive. Today was historic. It is probably going to lead to something. And this is something I've been saying here where, what I'm really expecting out of all of this, I think we're going to get a bounce, kind of like what we're seeing right now. And then you're going to get another major move to the upside and then another big move down. And then we are going to find out what happens with both more data, Powell and the Fed, and then Japan and the rest of the world in this carry trade. Because I even think this is what we were talking about. A lot of people want to blame the data and the rate cuts, and can the market react like that? Yeah, but the other side is Japan. And right now, yeah, Japan is doing great for the futures right now as we're speaking. As long as the yen trade is still in the bottle, then all of this is an overreaction. That's the way I've been explaining it here. And like I'm saying, what happened this morning, the yield curve uninverted, the VIX briefly was just under $7.70. In the last, Japan has never had a sell-off this big ever in its history. So in like a 2-3 day history, Japanese stock markets have never sold off this much. Again, what you opened up to this morning in the stock market and what happened in Japan, the only other thing you could compare it to was like 1987. It was a very rare sell-off of sorts, and then how it even compounded over the last couple of days. So like I'm saying here, this is going to lead to something, but at the same time of, yeah, wow, something could have snapped here. In the way I'm looking at it, if this is just a reaction to the data, then I think this is a pure overreaction. Otherwise, if this isn't just a reaction to the data, and then we actually get a rate cut out of this, and now people kind of have to respond and change policy here, then I think this is going to be a very, very big moment where growth will slow down for a little bit. Because again, if the yield curve is already uninverting, or it does do that uninverted, and then we end up getting the cut, and then there you go. I do think we will get a growth slowdown, just like some of these Fed people are talking about. So there's a lot to say, but I hope you guys are getting it. Literally, I think we're going to be moving. It's not really, everyone keeps asking me what I think was going to happen today, and that's why I said we'll go live on the watch list and we'll watch Japan, because it's not about just what one day does. It's really going to be the next couple of days. And why I say that, like, look how we got here. This was, a couple days up, couple days doing nothing, sell off, 3-4 days, chill out, 2 days down, 3-4 days up, 2 big days down, and then, the range right now is absolutely massive. So that's why I'm like, dude, this is going to be a back and forth. And this is where, again, I mean, just imagine all the videos with TLT, even telling you all about going cash. I mean, these are the moments of why you want to do some of those things, because now things are starting to develop. So it's going to get pretty wild here. I think there's a lot more, but like I said, the only thing I really would be fearful of is if the Japan genie is out of the bottle. If the Japanese hawkishness and them being hawkish regardless of whatever the data shows, there was a couple of real wage data that went up in Japan, and that could have contributed to it. But it's like if the Japanese yen trade, if that is what's killing us, then I would be scared. I would be worried about the market. I would be worried about the carry trade unwinding. I would be worried because the Fed couldn't even fix it. If that makes any other sense, if that makes sense. If this is a problem and it's squarely blamed on Japan causing this, liquidity, if we get the bonds to sell off, then I would be nervous. I even said this today. We were talking about, emergency cuts or a meeting, if you're not familiar, emergency rate cut, that would just be an unscheduled meeting where they have a meeting where it's not scheduled, like a not scheduled Fed meeting, and then they come in and then they start cutting rates. That's an emergency rate cut. So we talked about that. I told you that has never happened with the VIX below 40. That's why this morning you almost doubled that. You were almost at 80, which is insanity. But even right now, the VIX is at 38.50 at close. So it's going to be down if the futures hold up right now. But why I'm telling you that, because that's one set of the criteria met, but we're not going to get a rate cut until something breaks. Literally, like the bond market has to stop moving. A bank needs to fail. And that's what we're talking about, is that today you woke up a certain way and there was a lot at stake and a lot was moving. But if you notice, nothing really broke. So we've really got to see where this leads us here. Nothing broke today. How it leads to rate cuts or a surprise meeting, that will dictate a couple of other things there. But for now, like I'm saying, if nothing broke, the bond market didn't break or anything of that nature, I'm tying this all back to the Japanese yen, because that means we're good as long as that doesn't break. But if the Japanese yen starts breaking, that could lead to our bond market breaking. That could lead to another bigger disruption in a lot of other areas, and then things get really worse. Otherwise, like I'm saying, if the Japanese do good, the yen doesn't disturb us anymore, and this is all about the data, then I think eventually the market will kind of swing back a little bit, as, you know, no news will start to be good news. I do think bad news is bad news, good news is good news, but as long as you don't have any more negative developments here through, I think, some of the global stuff, no news will end up being good news. And that may be, if we don't have pure market mania and panic, I think we might shift to a narrative now of no news is good news. Does that make sense? Right now, because it went from bad news is good news or good news is bad news to now we're back at bad news is bad news, good news is good news. But in a weird way, it's either we get pure volatility and calamity, or no news will be good news. So yeah, there is still the war headlines circulating in the background, but sadly, I do think those are other risks. I think those can exasperate whatever happens here, but in a financial sense, again, the yield curve, the bonds, the fact Powell, you know, the thing about what's happening right now is that if enough things happen, Powell can move and change policy. You know, that's we're talking about something just so detached from even the election and everything else, because things are moving around where now, you know, we're talking about Powell changing a financial plan that people thought the elections would get in the way, and clearly you see how fast things shift here. We're not having that conversation. So, yeah, but Chattadonia, those are the main keys there. Is there any questions, or would you guys like to go over the plays? You let me know. You let me, because we're live right now, so I can answer any questions about Japan, about what happened today. If you're scared, you need someone to talk to. If you need me, call me. No matter where I turn, no matter how far. Don't worry, Chattadonia. You hold the lantern for 10 years. No? Good water. Yeah, I'm still in Airbnb. Unfortunately, all earnings plays got clapped. We'll talk about that here in a second. The Nikkei is up right now by 4.5. You should add to the long term, yeah, if you can find one. The yen unwinding can affect the banks, but some banks more than others, so who are more involved in that, but I don't think as many U.S. banks. If any, again, the paradox right now is how banks both benefit and get hurt by everything, from the carry trade all the way down to the potential rate cuts. All of those are kind of at stake when it's all said and done, because now it's like every bank has different exposure. Some banks have more commercial real estate. Some people have more exposure to paper and other assets. And then again, as the rates start to come down here because things are bad, maybe the consumer and growth does slow down, but then the banks might benefit off of lower rates easing up their held to maturity losses. So we'll see. The yen started to fall. Well, it started to strengthen because about a week ago, literally right the day of Powell, the Ueda, he came out and he raised rates by a lot more than last time, and then announced that he was going to stop buying Japanese bonds, a.k.a. providing stimulus. And then that went crazy. And how he did it, that's something we talked about, and that's the worry right now, because this is something too. Like right now, Japan is doing good as I'm talking, but the thing we got to like watch out for is the fact that, you know, the way Japanese Ueda decided to raise the rates, it sent a message that it didn't even matter about the data, because people wanted to see inflation data going up. But lately, all of the data for Japan has been bad, and homeboy was still aggressive and raised. So that's why people got really freaked out, because they're like, oh crap, maybe he's, you know, starting his own little hawkish plan regardless. I explained it today on stream. It's like what happened last week with Japan, and the way that he was kind of set on making this plan of raising. It was very reminiscent to Jerome Powell and Jackson Hole a couple years ago when the market really sold off. So that's what happened, and then I think that was very, 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 very bad. Very, very, very bad. But, yeah. Japan, well, they're typically, well, they are kind of data dependent. That's the crazy part about it, because people wanted the inflation to come back up. That was the whole trend. They're finally getting inflation. They could finally start tightening and not be the only place that's still easing. And then right when we got the first sign of it, it started to fade a little bit, but your boy Ueda is like, nah, I'm good. So we'll see what happens. It does feel crippling familiar. Yeah, it's going to be, I mean, it's going to be wild. I think there's going to be a lot, like I said, a lot of rips, a lot of dips, and I think this is going to be a very interesting market here, that it's either going to cool down before the election, or this may be one of the boiling points ahead of the election, if that makes any sense. I like MO a lot. I mean, I would wait. So we got our long-term deposit. Well, we could talk about plays here in a little bit. Is there any other questions? Is there any other questions about Japan, the market, what happened, the NKD, the NQ, anything? Otherwise, we got plays. I only have 2 plays, I think. Yeah, no, I got 3 plays. I got 3 plays. If you need me, call me, no matter where you are, no matter how far. We still do got to worry about global overseas tensions. That'll be another one. Rob, I don't know if Robinhood will close it, man. We had there was a lot of brokerage issues in the morning, man. It was really, really scammy. Well, yeah, I mean, there's a lot of things that happened today you haven't seen since 2020. The only thing I've said, though, is like it's weird that we've had such like crazy moves, and it's 2020 reminiscent, but this time around, like we don't even have anything that is like nothing is broke. So usually when the market's down 5 and you almost get a limit down, something already snapped. This time around, nothing snapped. That's the weird part about all of it. But Chad, let us get into the plays. So right off the bat, I have a couple of plays. The first one, it's already getting wrecked here. I even top-ticked it this morning, but I actually made plays. So even then, the Russell last night. So after that, I got out of my Russell. I flipped the yen. I took a loss on the Russell, then made a very big gain on the yen last night to balance out of that. I got out of those, and then this morning, because I was like, well, shit, I didn't want to double dip on the yen after it went up 3% overnight. I've been going back and forth on it. I was like, you know what? There's one more trade out there that if people are freaking out, it's kind of underperforming, and that is the Swiss franc. So the general idea was, if we are really going to be down, 6% in the AM, about to limit down, my general idea was go for some of the safe havens. So one of the underperformers, if you go look, compare it to like rates and rate cut odds, the Swiss franc. So if the yen was going to start breaking out, and then the dollar and all these other things were going to move, I figured that could be it. But I top-ticked it. I got clapped. I grabbed 1/6S future. I don't know if there is a ETF for this, but just keep in mind any of the safe havens, how they hold up. Otherwise, though, somebody was asking me, they're like, what should I buy? Like, what should I play? Like, I think it's really easy, man. Like I told you guys this literally on the last time we were live. I don't know if you guys remember. Literally last live watch list, we were just saying TLT and all of the yen plays are back in play. All of the bond plays, all of anything related to Japanese yen, that is pretty much what I would be focusing on. I really wouldn't look at anything else. I think you might there is a couple of plays I have for you here, but for the most part, when it's all said and done, I think this is where the action is happening, and this is where a lot more action is potentially going to happen depending on what plays out. So watch out for that. That is play number 1. Then play number 2. I'll give you play number 2 and number 3. Apple. So they have meat on the bone. Did I spell meat wrong? I spelled meat wrong. My bad. But they have meat on the bone. I grabbed puts on this one, so a lot of people were asking me about this. I grabbed Apple 100 Apple next week, August 16th, 105 puts. I grabbed 100 of them for about 5 cents. And why did I buy them? Simply because I wanted to play the volatility. So this is one of those volatility moves where you go for the super duper cheap penny stock. Yeah, this isn't a play where I think Apple is going to go down that much. The whole idea here is that I'm trying to take advantage of there being cheap options. So if any of you have been around any of the volatility, what happens to those penny options? They usually don't go for a penny anymore. So the general idea, buy these, and then right when the volatility picks up, you sell out, and then you are good to go. It's not even exposure. It's just taking advantage of the literally the 1 cent out of the money if we get anything between now and the end of the week. It's kind of like reverse selling the premium. I do think that eventually those will ramp up if people get worried. But that was my only other play I made today. And then NVIDIA. This one I think is very important. I think this is the bounce play. So if you do believe that there is going to be upside on this market, then I think that you should go with NVIDIA. That's what I'm doing. I haven't played it yet. I might even go for the futures, but the way I'm looking at it is, well, shit, if you are going to get a move up here from now, I do think that is probably going to be a better play. I just think this is literally your fourth, not your second chance, but your fourth chance, if that makes any sense. So we'll see how it all plays out, but I do think, again, yen plays, bonds, going with this back and forth, that's going to be the easy part. Couple of individual names. I don't think earnings, again, like Hims and Palantir were very good after the bell, and they moved a little crazy, but I do think it's just going to be a very slow game of seeing what happens overseas. Does Japan actually have an unwind, or do we just go back now to fielding the data to good is good, bad is bad, and hopefully Jerome Powell is not behind the curve. Ta-da! There it is. That's it. That's all I have for you. That's all. Any questions? Any questions? Again, the only other plays I made today, again, I got rid of my Snap shares and my Russell as well. I took some weaker things off the table. I don't know. I might clear out everything else, but I want to wait till we get a bigger bounce. So remember, I don't know, it was just a couple months ago where you guys saw me indiscriminately, sell everything. So I got a lot of cash. I mean, I'm not bothered by any of it. So it's been good, man. It's been good. But you let me know. Is there anyone? Oh yeah, we have the Fed future. That sucks. That Fed future play was up a lot this morning, but now it went down by the end of the day. But I am still in it. What else we got? Boeing testifying. Won't the crash in Japan cause TLT to crash? It will. That will be the next level. So if before the Fed steps in, that would be part of it. So like literally, like if the yen trade gets out of hand, like I said this today, one of the problems would be if the Japanese started selling our bonds. If they started selling bonds to, fund everything, then our bonds would die. And then that's what I'm saying. That's where you could see the bond market. The bond market could kind of get shocked. And then we now have a real situation where the Fed would have to step in. But essentially, they could kill the bonds until the Fed comes in and saves everybody and everything. FX is Swiss franc ETF. Oh, yeah? Oh, yeah? No way. We have earnings tomorrow, too, on some names. Oh, wait. That didn't load. Bam, 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 bam. So, again, SPY, let's see. Let's see where the Japanese, the Nikkei. It's up by 4% still, 3.92 FXF. It wasn't as bad. So I'm glad we're live, but I thought it sucks. That's the thing that's like really awful is that by the time we go to bed to like now a lot could change, but for the most part, this isn't bad at all. Like this is very lucky. in a weird way. Everything is kind of cool, considering how ugly yesterday was. I mean, to give you an idea, it was like, what was it right here? No, you're still mad early, actually. So yesterday, I guess we were right here. We still didn't make the major flush, but the futures had a gap down. So it was like 2 hours from now, we really started dumping. I don't think you should be concerned. I think it's going to be a game of Russian roulette. I think every single day, it's either going to be good or bad, and that's going to determine our market. And then maybe we'll find out in a couple days if it really isn't the Japanese yen. And you know what you should be praying for would be a divergence. So if the yen can diverge from the market and the yen can weaken, and it could find a way to like kind of go in a certain way, then I think it'll be chill. But other than that, if this just all confirms that the yen is the architect of all of our problems, then we're not gonna have a good time. No, I had one Airbnb earnings play, but then it got clapped on the pre-run up, unfortunately. Where do I see TLT by the end of the year? I have no idea, but I hope you got this. We talked about this on yesterday's watch list. 3.5 is a very big level on the 10-year. So I don't know, because maybe that could answer your question. You could extrapolate it, but essentially 3.5, this should be the price level where like that's like ultimate hard landing. Anything below 3.5, shit's getting really bad. But 3.5 is like essentially you're about to go from soft landing to hard landing. But this is going to be where we hover around. Right now you're at 3.8. So I think, again, it was 4.25 to 4.5 and then 4. We're going to play that between 4 and then 3.8, even 3.75 or 3.5 and 3.75. But I would keep that 3.5 as a place marker because it is very important here with the bonds. They halted all overnight trading. Who did? Robinhood? I mean, I wouldn't be surprised, but that's crazy. I mean, dude, they halted first 2-hour trading this morning, man. And TLT, go through any of the videos and search like TLT or like bonds. I have a lot of tutorials. I don't know if Chad has if they got a playlist. Oh, you've been telling me? Oh, my bad. I know, yeah, I do remember you guys saying that, but no one said it as, everyone was just like, it's halted. I don't know, it just didn't sound as concise as that. I don't know, something about a WASD. I said, that clicked. I guess we are data dependent on Japan. That may be a simple way to simplify it. I think in the short run, I think we could, if Japan doesn't do anything, you're going to move up. I think there's a monster rally in store, but I think we have unlocked Pandora's box. That's what I don't know. That's what I don't know. It looks like it, and what I mean by that is that we are going to be getting like 2% swings every other day. That's what I mean by Pandora's box. The volatility is now opened up. Now it's going to be 2% up, 2% down, 2% up, 2% down, rocket up 2%, sell off by the end of the day, go back down to 1%, and then we're going to start getting some of those wicked moves there, which would be fun. I think that'd be a great market if we could get that. But then again, that's a completely different setup to a lot of stuff we've been dealing with here, and then tie that into the data, because that's what I'm saying. Like some days, maybe it will be Japan or not, but I think the market has a lot of move to run now, and then we'll see where that leaves us. Mivga. No, those Airbnbs, I don't think there is any hope. No, it's tomorrow. Not unless Airbnb has actually there is maybe some hope in the sense that the IV might just go up, but we need a really monster beat for that one, because that was 2 standard deviations before the stock sold off, and then we got hit. I know. Oh wait, I forgot my only other play. I made a play on oil. So yeah, I forgot. I bought MCL, but I went small. I don't know. I didn't want to go too crazy because I felt like I was kind of late after going back and forth, and then I was just waiting. But I went with MCL. Those are up a decent amount. We got in at the low 72s. That was it. But yeah, that's my only other future there. I think I'm in now, because I got out of the Russell, then I got out of the yen, and then 6S. I'm in the Swiss franc and that one. I do think swing trades and straddles are good. I think even for earnings, people were asking me about the earnings previews. I was just saying I would play both ways on any company you like, just because this environment, I mean, we're moving very, very large just naturally, and then if a company really does have a pivotal earnings, then you'll get even more of a boost. I think the big TLT comes after it goes down. I think it could be. So like I said, I mean, I think all TLT and yen plays are in play right now, not necessarily the big one. Like the big one is going to be a result of the actual shift and whether or not like we get a Powell panic, but I would watch this Bank of Japan shit. So like I'm saying is after, let's say, Japan breaks us, then that's going to, I mean, God willing, that would be the best opportunity to get the big TLT play. Why? Because then if Japan breaks the bond market would die right ahead of the Fed coming in and cutting rates and then causing TLT to rocket. So other than that, though, like I think bonds are the play. There's bullishness that's being driven for many reasons, whether it's Powell and everything else, fear and the rate cutting cycle around the world. But anything like the real big major stuff, though, we do need a little bit more for the big TLT play. I don't think that one's there, but I do think, you know, setting up and having your hands up, and literally we've just been talking the last couple weeks, just anytime that curve starts steepening rapidly, there's a lot of opportunity there. And, you know, we've been in it back and forth, and some of you got to take advantage of it too. I don't know if I would reload on the MO50 calls. No. MO held up great, but I don't know. I don't know, maybe. It depends how cheap they are. Cotan. What up, baby? I mean, TLT could go. Everything's just wild. After what we saw this morning, man, I mean, TLT could go anywhere. That's the thing, but like the bond market, like when things break, things can really, really move. And that's where I'm saying, though, like the irony, though, is that if the bond market is going to break, though, or something's going to break and it is in the bond market, the yields would have to rocket. So you're going to wake up and then it's there. Futures came down. You're down 1% so far. So, again, the Nikkei was up 4%. Now it's up only 2.9. So, I don't know. It is kind of, that'd be wild if it dropped. I don't know, man. I don't know. Maybe in October, TLT. Yeah. See, I mean, that's the thing, though. For some of the bond plays, this is either going to hurt or help a lot of you guys who want to get involved with it, but bond auctions. So you got a ton of bond auctions this week. If anything, borderline the only other important data. So that could move some things, and that could be where you could get your entries and exits. If the Fed cuts, will inflation return? Possibly, but like you saw today, I was explaining this because like, yeah, like I think the worst case scenario, imagine we freak out and do all of this, you know, and then we cut rates on this freak out, the market gets clapped, and then inflation surges again. That would be absolutely awful, right? But we talked about it. Look at what happened today. This fear instantly brought deflation with it. Not like real, like full-blown deflation for the entire economy, but in its own little sphere, it brought deflation. You instantly saw prices come down dramatically quickly. And that's where it kind of, you know, these types of moves and the market really selling off, that even though lower rates, cutting those rates can spur inflation, the fear and the downside pricing, that could deflate things relatively rapidly to kind of counteract, or sometimes the market sell-off can be more deflationary than any inflationary stuff created through any of the rate cut policy. So yeah. Ta-da! Bradley Frezzo. $1 TLT plays. They may start moving. So we got the cheap ones. Our TLT plays are up 400% in the morning, and then they came back down, and they closed like up 100% or something. So, but the cheap, again, all cheap options. If we start moving 3 standard deviations and doing these record moves, all of these cheap options, I mean, they're gonna start moving. Or if this is a fade, then everything's just gonna, all the put premium is gonna scam the shit out of everybody. Emergency, I don't know if it would do more damage. It depends, because like what if the market got really bad, and they needed it. But I mean, like we said, just like if you go back through, this was your homework for yesterday. I gave you guys on yesterday's watch list. But like if you look at the past events of like selling the first rate cut, the performance depends on how the data comes in. So if you cut rates while the data isn't like getting messed with, all is well, my brother. But usually anytime we've cut with the data falling, it has led to a really, really big decline. I think 1980 and then 1989, but then 1989 literally preceded a recession in 12 months. Those are the only other times there. So it depends on the data, but like pretty much we can't have a rate cut would be bad if the data keeps collapsing, but if the data doesn't collapse, then the rate cut may not be as much of a problem, or it'll mean very much more shallow. And this was a big thing we talked about, like, because I know a lot of people got scared and we saw how fast assets can move, and I think that's what today was a lesson on. But like I told people, I was like, man, this isn't these all recessions and recessions and how the economy moves after a rate cut. It's none of it is permanent. It's not like you're getting a divorce. It's not like you're breaking up with somebody. It's literally, it slows down for a little bit and then it comes back on. We're talking 3 months slowdown, 6 months slowdown, 9 months, a year. Those are pretty much the ranges. So anything that we're talking, even if the data is collapsing and they start cutting rates, that's not going to say, oh my gosh, you're never going to buy anything. Oh my gosh, you're never going to. That's me. It doesn't say, oh, don't buy anything for years. Your kids are lost generation. No, it's like, it just, means we're probably going to have a slowdown for like 3 months, 6 months, 9 months. It just depends. The worse the data, the longer that slowdown. The shallower, the least worst data, then we'll do a little bit better there. Oh, Mr. Hiss, baby. What's up, man? Japan market is retracing. Is it coming down? We saw it last. It was at 4%. That's why we're live. Uh-oh. Now it's up only 1.8. Hot dog. I don't know. Well, the Japan rally is starting to look like BS. Market could go up. I mean, all you got to realize is it's not going to go straight up. It's not going to go straight down. So even on the way down, I think it's going to have its moves up. And then even on the way back up off of the rally, it's gonna come back down and do these volatility moves. But for the most part, all I would say is just pay attention to it. At least there's a lot of people out there who they're just ignoring Japan. So that's why I'm saying if this thing starts moving and Japan starts getting out of the range, like, you don't have to like follow all of the BS, if that makes any sense. You don't need to play anybody's game, and then all you could do is just watch the Japanese and know there it is. So now it's 1.8. The yen might be good to buy right now if it's negative. Oh yeah, yen, it's cheap. This is where I was flipping it around these prices last night. Oh no, it was a little bit lower. At 6.8. So if you could get, but it's not bad if you really think so. There's a lot of risk if you're wrong, but in the short run, if you do think you're going to get similar volatility there, that is a much cheaper than where it was just at the peak of yesterday or today, I guess. The Sound rule. Yeah, well, I don't even know if it technically triggered. There's a lot of debate, but even I think the founder even said it's not that big of a deal yet. But people were worried about it. I think by the next jobs report, it will be undisputably triggered, though. What else we got? Ba-da-ba-ba-ba. No, we didn't have Philo today. Oh, that's the end. I want NKD. Bro, I don't know. I thought it was going to be, dude, it was up 4%. Now it's up only 2%. So I don't know if we're going to sell off, but like pretty much you're like right. Like I said, give it like another hour. Another like hour, 10 minutes. That's where it started dumping yesterday. I'm looking at NKD futures, the Nikkei futures for Japan. I think gold has been good, but I don't know if gold is gonna do good in this moment for now. What I mean by that is I would come back to gold kind of like the bonds after it plummets, because gold is getting part of the liquidation. So gold is kind of reminding me of even like '08 where it sold off with things. But yeah, gold, I'm not liking how it literally liquidated, but it's still up a lot, you know, considering it. I would say it probably preceded this whole entire move. So we'll see. I've not been to Disney World, no. On tickers to watch, yeah, I would watch. I'd watch the yen, YCL, FXY, or the futures /6J, and then I'd watch the Swiss franc. Keep an eye on Apple. I think Apple is the tech stock with the most meat on the bone for the downside, because they literally were just juiced up by buybacks and then BS AI stuff, and then that Buffett news was bad. So if you want more downside plays, I'd say Apple is your one, especially if things get really ugly. And then NVIDIA for the upside, because if you do think this is going to be the bounce, you know, this is your chance to scoop some of that AI trade about 38% lower than the latest peak. So yeah. So Chatadonia, is this live? Yeah, this is live, man. We decided to go live because I don't know. I think I might wrap it up. I need to get me some rest here. But the Nikkei, that's what we came here to watch. That's why I went live, because, again, we were talking about how important Japan is with all of this. And literally Japan was up 4% on the futures, came back down. We're kind of in the middle. So I don't know, man. I don't know. I'm in Cali, baby. California. Again, we are going to be live. Let me see if it'll take you there. I'll set that up. Make sure you guys do show up on the live. Y'all found it, though, this morning. I just got to see it. Y'all said, real volatility, Josh. We're here. We are here. Wild times, bro. A lot of houses in La Quinta. Send me a good house, man. I'm down. It's crazy. I mean, it just sucks because, like, depending on how this stuff plays out, this might even change some of my plans with real estate. Because I don't like it, man. If we get a rate cut with the bad data and we get the bad one, I think that'll be again. I've been saying I think rate cuts are going to be a little bit more restrictive for real estate than people think. We got a Boston multifamily. I'm down. I'm down, man. I'm down. It's playing out like 1929. I mean, the only thing that sucks is that some of these moves have literally been the biggest in history. Yeah, this is live, Kanan. We're about to wrap it up, though, I think, as we watch here. But that's the dude, again, the way we've moved, the way we opened up with the futures, Japan, some of these assets, I mean, they've never moved like this. So it's very wild. And then, again, there's still so much from election to, like, live conflicts all around the world, which is just crazy. I think there's more potential for downside as well as Again, I think we even have some upside potential as well, but it's the next from now until September. I mean, our work is going to be cut out for us. It's going to be a weird mix of data and Fed people, and then playing with foreign politics. And then does Japan murder the fundamental financial environment, or do things chill out? It's going to be wild, man. It's going to be wild. I think small caps are too risky. I mean, if you could take a punch, I don't think they're too risky, but I think they're, anything is going to have, to the victor be the spoils, high risk, high reward. If anything, I like China the most right now. So I think China is probably the better one. We'll find out very shortly, but, if the yen trade, the carry trade, and all of that, I do think I think China would benefit off of the Japanese yen getting strengthened. Ba-da-ba-ba-ba. China. Yeah, it's China. He calls it China. He doesn't get China. He doesn't say it. Not like that. I know. It's a shame. Alibaba. Baidu. Baidu. Yeah, you're a little late. We're wrapping up. I think so, I don't know. Unless I just keep this live here all night as you guys watch that. But I would watch it. Watch/NKD. It just sucks because I feel like by the time I take a shower and look, this could all change. But for now, things are looking good. Things are looking good. Everything is good for now. Everything is good for now. All right, man. I think that's it. I was waiting. I was like, maybe I'll jinx it, and then it goes crazy. No. All right, maybe. But Chatadonia, I think that's it. This video, if you stay here in the chat will take you to the live video tomorrow. So we'll be live tomorrow, baby. Get some rest. That's it. We in volatility, baby. It'll be calm. You'll be able to rewind here in a little bit. Once this all resets, we'll go again. There's a lot there. Even then, if you come on tomorrow live, we'll be able to answer all of it. Just hopefully, as long as this doesn't blow out while we're sleeping, we're going to wake up to a little bit of relief tomorrow. And then we'll go from there, see where it takes us, and find out how this volatility ends. But Chatadonia, I love you all, baby. Thank you for your time, man. God bless all the real ones, man. Showing love. Finger to the sky, baby. Don't forget why we're here. Yeah, keep that armor on. You already know. But Chatadonia, I love you all. Have a wonderful evening. And Horna. Bye. See you. Good night. Oh, yeah. Follow me on Instagram at the Trading Fraternity. Go look. Follow me at Poke. Bye.